Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.9056 mark, and here on TradingView the market is down by 0.38%. And in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. So Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upper side, making it to an all-time high at around the $2.9 mark in a movement that I'm terming as a higher Elliott wave count 1 to the upper side. And after seeing the all-time high, we had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $0.31 mark in a movement that I'm terming as a higher Elliott wave count 2. And after seeing the formation of a higher Elliott wave count 2, whatever we expect next is a bounce to the upper side in the formation of a higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upper side, and giving you a minimum target area to the upper side in the formation of that wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the Fibonacci's to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that wave 3 at the Fib level 1.618, which perfectly lies at around the $4.99 mark, and that is the minimum that I would expect Polygon Matic to do in the next bull market, and that is my long-term scenario that I'm expecting to play out here on the Polygon Matic chart. And jumping to the forward chart for further analysis and also give you the short-term scenarios that can play out. Here on the forward chart you can see I have this Elliott wave structure in blue, which represents the fractal waves that we expect to see in the formation of that higher Elliott wave count 3 because of its impulsive nature. And I believe we have completed the formation of that first wave to the upper side, and because of its impulsive nature also, we have seen the formation of this fractal wave in yellow, which has completed the formation of that wave 1 to the upper side through the formation of that wave 5. And having seen that movement to the upper side in the formation of a higher Elliott wave count 1, whatever we expect next is a bit of a retracement to the lower side in the formation of a higher Elliott wave count 2, which is right here, and that is my primary scenario that I'm expecting to play out here on the Polygon Matic chart. And because our wave 2 is a corrective wave, we also expect to see an ABC corrective structure, and I believe we are seeing such a structure right here. And there are two possible ways we can have that ABC corrective structure, and that is what is going to give me my short-term scenarios that I'm expecting to play out. And the very first possible scenario is viewing this structure over here as a massive ABC corrective structure, having this as the wave A, then this as my wave B. Then I'm expecting a massive sell-off over here in the formation of that wave C, make a new low that is below the low for this wave A, and fully maximize the formation of that second wave. And for that to play out, we need to lose key areas on the Fibonacci's over here, because over here you can see we have been seeing a bit of a bounce to the upper side, faced a key area of resistance at around the $0.95 mark, and using the Fibonacci's, connecting them from the low of this wave over here to the high right there, that gives me a minimum retracement area between the Fib level 0.382 and the Fib level 0.618, and I can mark that target area here on this chart, which perfectly lies between the $0.88 mark and the $0.83 mark. And within that target area, that is my key decision point, because in case we continue seeing lower prices and lose this key target area over here, then that would mean our massive sell-off in the formation of that wave C is playing out, and I will expect that movement to also lose the key area of support at around the $0.78 mark, see a retest of that key area of support, and continue pushing lower in the formation of that wave C, and also fully maximize the formation of that wave 2. And the other possible scenario that can play out is having a different wave count over here, and that for that to play out, we need to hold above this key area on the Fibonacci's, that is the Fib level 0.382 and the Fib level 0.5. In case we continue holding above or maybe within this target area that I have sketched out over here, there are chances that a different wave count will be playing out, because I'll be terming this movement to the lower side in the formation of this wave 2, having this as a massive wave A, this as a massive wave A, Then in case we continue holding within this target area, we can expect a bounce to the upper side in the formation of a wave B, then expect another impulsive movement to the lower side in the formation of that wave C to fully maximize the formation of that second wave, and sketching out a minimum retracement area to the upper side in the formation of this wave B using the Fibonacci's, connecting them from the high of that wave A to the low of that wave A. That gives me a minimum retracement area to the upper side in the formation of that wave B between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $1.02 mark and the $1.09 mark. So in case we continue pushing higher, see a breakout out of this channel that we have been trading within over here, and also manage to break above the 20-day MA, manage to break above the key area of resistance at around the $0.95 mark, and see a retest and continue pushing higher and make it into this target area that I've sketched out over here, there are chances that this will be my wave B high. Then from there we can expect the formation of that wave C to fully maximize the formation of that wave 2 to the lower side, and then from there we can expect another bounce to the upper side in the formation of that wave 3, then expect a wave 4 and then a wave 5 to fully maximize that higher Elliot wave count 3 that I have shown you here on the daily chart. So those are my short-term and the long-term scenarios that I'm expecting to play out here on the Polygon Matic chart. And jumping back to the 4-hour chart to also take a look at the indicators. Here on the RSI, we are trading at around the 46 mark, meaning we have massive room for us to support any movements to the upper side and also to the lower side. Also taking a look at the MACD, here on the MACD, we have printed a bearish cross and we are seeing a bit of an increase in the selling momentum, and that would mean more prices are coming our way. So let's continue watching that target area that I've sketched out, that is between the fib level 0.382 and the fib level 0.618. So in case we lose that target area, then my other Elliot wave count, that is my ABC count, will be playing out, and I'll keep you updated on any movement that plays out.